Telstra says its agreements with the National Broadband Network will stand even if there is a change of government. At today's investor briefing, the company shed some light on what it plans to do with the $11 billion tax dollars it's getting for facilitating the NBN. But some were hoping for more detail on how Telstra will splash its cash. Here's Simon Palin.
The cable is being laid and Telstra is counting its NBN money. If all goes to plan, it'll have up to $3 billion in excess cash over the next 3 years. And it'll continue to pay investors a fully franked dividend of 28 cents a share this year and next.
We think it's a very good statement about where we're going, and it's significant movement from where we were 2 years ago.
But Telstra stopped short of announcing any share buyback or potential acquisitions. Analysts say it's because of uncertainty around several aspects of the NBN. When exactly will the rollout be complete? And how will it change the telco market?
A range of developments such as new competitors, what existing competitors are going to do, how the pricing environment is going to evolve, a range of things that are just not possible to predict today.
And if the coalition wins the next election, what happens to the $11 billion Canberra has agreed to pay Telstra to facilitate the NBN?
The biggest issue for Telstra going forward will be potential change of government and what impact that could have on their strategy.
The current thinking coming from the opposition is that they would continue with an NBN but in a slightly different technology design that they believe would be faster and less expensive. In that situation, there isn't a lot of difference in terms of the flows that we get.
There's also the question of jobs. David Thodey has confirmed that jobs could go as Telstra decommissions its fixed phone network.
Yes. Regulatory changes, cycle change in the industry all play an important part in the changing mix of our workforce.
Telstra is also grappling with a fixed-line phone business which is being heavily compromised by the rapid take-up of mobile phones. And its directory's business census is also hurting. So analysts say the key question now for Telstra is whether the $11 billion coming its way from the National Broadband Network is enough to override the underperforming parts of its business.
It's probably an even way bet. All telcos throughout the world need to go through this difficult transition. I think Telstra's outcome of being able to do it in gradual steps at the same time but getting paid for it, I think is the best possible outcome.
Investors seem happy enough, sending Telstra's shares almost 1% higher.